What if I told you that the sectors most investors have ignored for the past year could be the ones set to boom in 2026? That's why tonight we're diving into 3 of these forgotten ASX sectors. And get ready, because the turnaround stories brewing here could surprise even the pros. We'll reveal which industries will lead the charge, why timing matters right now more than ever, and which stocks are the ones to outshine before the market wakes up. So if you want to be ahead of the game, you've come to the right place. With decades of experience and sourced by the likes of Bloomberg, CNBC and most major Australian media outlets, we're the brains behind Australia's leading accredited share trading education. I'm Dale Gillham, joined by Wealth Within Senior Analyst Janine Cox and Philip Tordtevsky. Good evening, team. How are we?
Good evening. How are you?
I'm great. I was glad to see you both had some sleep.
We've got some sun today, which is just amazing.
Sun. I know he was looking terrible the other day. He was no sleep, young kids, all that.
Yep.
So no excuse for me. Too much drinking and partying. But anyway, let's get straight into it. Markets have been chasing the same few winners all year. Now in the US, it's tech, and here at home, it's been the miners along with the financials. But the sectors with strong drivers like healthcare and energy have been very disappointing. Has the market missed something here? Now I'm going to go to you, Janine.
Look, it's a bit of a pendulum swinging here on the energy sector because we've had all these policy settings, obviously around the globe, that have caused a swing away from a lot of the energy stocks, particularly traditional energy type stocks. But I think we're going to see a bit of a move back towards these energy stocks now, which have been unloved. It's always the same story. Those stocks that get sold off, they get oversold, and then eventually it swings the other way.
So you're talking about traditional oil, gas type energies, electricity production, that sort of stuff?
Exactly. We're just poised for a bit of a takeoff. So that's what you've got to really be excited about when you're ready to watch this show. The next one is healthcare.
Okay.
That's another good one. So healthcare is another unloved area, and a lot of you watching will remember that we've gone through these sectors over the history of this show, just telling you ahead of time what's coming up, and that's what we're going to do, isn't it?
Well, I only looked at CSL a couple of hours ago, and its high, all-time high was February 2020. So over 5 years it's been going down. It's nearly halved in price in that time. So there's got to be some opportunity somewhere. And what about the more traditional parts of the markets, the ones that are seen as just too boring or cyclical, like consumer staples? Are they offering any surprises, Phil?
Look, I think they might in 2026. Obviously now all the talk is around inflation easing out in the US, and let's be honest, at home inflation's been sitting at 2.1% for quite a while. So with that scenario, if we do go into an easing cycle, then that bodes well for the staples. And there's also been a drop-off in, I guess, agricultural commodity prices. I mean, soybeans was the most recent one, with Trump arguing about soybean prices are hurting American farmers. It's got nothing to do with his policies, by the way, or his tariffs.
Don't they feed most of them to the cows?
Yeah, they give a lot of it away to China. But the point is that lowering of the agricultural commodities, that bodes well for the cost aspect of these consumer staples. So I think there will be opportunity. I mean, like Janine said, the sectors that take off today, tomorrow, they're not the ones that outperform. And it's often these sectors that are unloved right now that are seeing or will potentially see a bit of a rotation, especially with the economic outlook in 2026. All
right, well, let's get into our first lot of opportunities here. Now I'm going to go straight to you, Janine. What do we got?
And it's an exciting roundup as well, so stay with it. Now, we've got to have a look at the sectors. We haven't done this for a little while, and it's so important to actually get a bird's eye view of what's going on from a big picture perspective. Now, this is actually the energy sector that we talked about before. We know there's been a lot of sell-offs over time, but when you look at what's going on right now, the energy sector has actually come off this low in April 2025. It's up about 34%, but the upside potential from here is quite significant. So if we look at where the next major level of resistance is, it's about 40%. And then beyond that, the all-time high is way up here. Now, I'm not suggesting at the moment that we're looking at an all-time high, but there is some good short to medium-term growth opportunity there in some of the stocks in this space. So energy has been so cyclical, and it's funny because we talk about cyclical stocks, but but this one's actually been sold off when a lot of the cyclicals, like your healthcare stocks, have actually come back. Energy's come back at the same time, and they may actually make a rebound together, which is why this is really, such interesting timing. But that's energy, from me, a 30-40% upside looks interesting.
It's really funny because we saw it fall for 13 years into that 2020 went low, and now it's up obviously from that. But you'd think energy would be just a steady growth area, wouldn't you? Because we've got more population, we must be using more energy.
Yeah.
So why is it we're falling so long?
I think regulation is the big one here in Australia, especially. There's been this drive, move away from certain types of energy. Don't do it, do it. But it proves the point. I mean, I was speaking to someone yesterday on one of the shows, or I saw a comment about, and we covered off some oil players, and the talk was, well, why wouldn't you just buy and hold a stock like Woodside? And when you look at the energy index, that's very much like Woodside. Well, the proof's in the pudding. When you look at a stock like, or the energy sector, like Janine said, it's been a trading opportunity over the last 10 years. It's not been a buy and hold investment opportunity, regardless of the dividend, because your growth would have been getting slammed. But if you were able to get in and out of the market, do the things that we show on this show all the time, the things that we teach, and capture that profit, learn how to sell properly, you would have outperformed in this particular sector, even though, as you said, over the last 10 years, it's been falling. So I think with energy, that's something that needs to be highlighted. It's that there are good trading opportunities, but until that real cyclical turn happens, you've got to treat it as such. Otherwise, a buy and hold approach in this space is going to damage you until you get the confirmation.
Well, buy and hold doesn't work that well at all.
It just proves it, yeah.
Let's have a look at the first stock.
All right, first we've got Whitehaven Coal. Now, another stock, again, traditional energy, not in line with the new wave of movement, if you will, yet Australian Super recently went very heavy into this stock. Some say it was for the yield, but I mean, still, getting into an unpopular space, if you will, dirty energy. But to me, the chart looks beautiful. I think this is probably one of the picks of the bunch when we're talking about opportunities over the next 6 to 12 months, especially with what we're seeing now. And I'll just apply some simple levels. The fact that it's come back to these important levels, previous highs where the market has accepted price now, we've had a really nice pickup, strong buying coming through. And to me, this is the crucial part, what we're seeing right now. Throughout history since 2024, we've seen buyers and sellers battle it out, with sellers really dominating. This has been the first little inkling recently that buyers have taken control. We haven't seen much selling with their attempt. So I think watch this space closely. It looks very, very interesting, and big picture coming off a really decent correction. This might be more of a medium-term play if it can, start to break through these levels here and continue this momentum that it's going on with. So it's good to be looking at something like this early days. But again, you line the right strategies with it, you can really do some good things.
It's doing some textbook strategies, isn't it, Janine?
Yeah, it's all those setups on the chart that you can see in terms of its, movements in these zigzags down, and then we're seeing the higher lows and higher highs as it's unfolding. There's so much support there for it. In saying that, though, if it fell away and went through that October low, then obviously you would be changing your view, but you've always got to have those two perspectives.
All right, so let's get into the next stock, because Whitehaven Coal's looking great at the moment.
Yep, and this is called Amplitude Energy. Now, the stock's trading at 24 cents at the moment, so obviously it's not for everybody. However, this stock is an energy exploration and production company, formerly Cooper Energy, focused on supplying natural gas in southeast Australia and low-cost oil production in the Cooper Basin. And look, this is another classic scenario, and people say that energy is just not going to make it again. But when you start seeing that there are these really huge support lines underneath the stock, and it's come back, it's hit that numerous times, and now it's actually setting up and looking really nice. You just can't ignore these sorts of signals. Most people probably wouldn't have even noticed this sort of thing. If they're just looking at the short-term price action, then they're just thinking, oh, this stock's on a bit of a run. It hasn't been there for a long time, because if you go back here, we're talking about 2022. It's the last time prior to this sideways move when it was trading at those levels. But, there is resistance there, no doubt. But once it gets through all of that, and we can go all the way back through here, you can see that there's some really strong support and resistance across this zone here. The actual level that this stock is going to turn at can only be determined when you break this down and do a full analysis on that monthly chart of where it's going. Now, people who haven't been trained with this discipline, they're focusing on weekly or daily charts, just totally miss that big picture, and that's so important.
Oh, look, it is. It's very, very important that you understand what you're doing. I mean, I know we were at Phil and I were at the Microcat conference last week, and there was like more than a couple of dozen of our graduates there, and it was amazing how they look at smaller stocks like this, or the smaller ones than this, and how the great unwashed, as they say, or the uneducated look at it. I mean, two things that happened at the conference is, one is I was so surprised at how many of our students said, I'm trading full time. And I went, wow. And the second one, I'm not that I was that surprised that they were trading full time, but it was just like so many came up to me and go, I'm trading full time. And the second one was how they actually viewed those lower cap stocks, as opposed to, you know, people that we get emails from on here, et cetera, which shows us why we need to have good education, understanding stocks like this, which means that's what you need to get this book. It will show you how to look at different stocks, do your money management or your risk money management. It'll also tell you why you don't buy and hold, because that's one of the greatest myths on our stock market that will keep you broke or performing very average at best. So once you've read this book, you will never buy and hold again, and you'll actually make more money and understand what Phil was saying a little bit earlier. So risk, money management, position sizing, which stocks to pick, how to construct your portfolio. The book is for free. You've just got to pay the shipping. The link is in the description below. So get a hold of the book and you'll start getting more money into your back pocket. Now we're going to go to another stock. Have we? Yep, Phil?
Yeah, sure. Let's. It's actually an index. We're going to move into the healthcare index and have a look at that, because, you know, backing on from what you said about CSL is not looking healthy at the minute. But when you look at the index overall, since 2020, it's been the same story. Now, you know, the market's not seen prices above that February 2020 high. In fact, it's produced a pattern again, which is so important, and I don't want to keep harping on this, but it is things that, you know, when you understand, when you know, things we do teach, understanding where a stock is in its cycle. People often say, okay, I want to buy a stock and I'll try to implement any trading rule I can, or it just looks good to me, I want to get into it. But then you ask the question, where's the context? Where is the stock likely to go up for the next 2-3 years? Is it topping out? Is it basing out? Is it likely to fall? Being able to answer that question first, that puts everything into perspective as to whether there's a good opportunity to buy and sell. Whereas, you know, I find people do the opposite first. They look to get in and miss getting the bigger picture.
They do.
In terms of where it's at. So,
but I've often said people do everything back to front.
Yeah.
You know, they look for stocks to buy rather than what's the portfolio they should be running, and then select, there's a group of stocks that will fit that portfolio, and then you just narrow your focus down to that. We see people just take a shotgun approach, and they're just looking at, or they're watching shows. I mean, we know the vast majority of people that watch this show are just looking for us to tell them what to buy, but that's only half of the story. If you don't know how to sell and where to sell, you're not going to make a lot of money. You're going to be hit and miss and you know, unconfident. You're going to be worried about stocks when they start to fall away. You're not going to know where to sell. There's a whole range of issues that we highlight here that people have, but you need to know the portfolio first and then get the stocks that fit it. It just cuts down your time and increases your profit and reduces your risk.
Yeah.
So, but healthcare sector, but isn't that really CSL and Cochlear?
Yeah, when you look at this index, that's a good point, because they are major portions of that sector, which is why this chart does resemble a mix between those two. And, you know, it's important with healthcare, you know, the fundamental drivers behind healthcare right now, what we're seeing is there's this big push, a lot of investment going into health tech. So there's the AI involvement in healthcare, which is driving innovation fast. And then there's the other side of healthcare. We've got the ageing population also, which is a nice driver for it. But then you've got the, I guess, traditional type companies like CSL, which is now having to divest arms of their business to try to find a new spark, if you will. And the share price is being hurt right now. So it's I guess, being able to pick the stocks within the sector, the ones that are advancing and moving forward, is going to be the difference. And just quickly, with all that said, where I see this right now is this is giving real typical pattern unfoldings of what you would see generally, potentially at the top of a market, especially if we start to break below that 31, 32,000 level. Now, if we hold there and start to reverse up, this might mean something very different. But if we break 32,000, I think, you know, you're going to have to be very selective with which healthcare stocks you pick. It's not to say the opportunities won't be there. They will be there because it's growing, but you need to be selective. It's not just buy blanket healthcare.
No, it's not. And I know at the Microcap conference we saw a couple of good healthcare or healthcare tech stocks and biotech stocks that look ripper. And I know on Thursday you and me, and we've got another special guest on the panel. We're doing a video that will be here on YouTube. So that will be out probably Thursday afternoon. And we'll probably have a link for you to access the recordings that were done at the Microcap conference. I'm just working on that at the moment. So watch out for that on Thursday. But Janine, you need to talk about the next stock.
Okay, let's go for it. The next one we've got is an interesting one. It's Ansell. Now, Ansell's come off this huge support. You can see down here at around $20, $21 and had a really strong run. So this is in contrast to what we've seen on those other big healthcare stocks. It's pulled back into this low. Now, in case you didn't know, this company is actually into personal protection equipment, manufactures and distributes gloves and other protective gear for both industrial and healthcare markets. So, and right now there's still upside to that all-time high. There's a high probability for this stock to go through that all-time high. It's trading somewhere in that vicinity, so there's still about 30% to that level. It's got a good chance of actually making that move, as long as it doesn't take out this low in October 2025. If it does, then I'd be reconsidering the prospects for a short-term pullback. But looking at it at the moment, it looks poised for another move. So I'm quite liking it at the moment.
What about you, Phil?
Yeah, I tend to agree. And I mean, look, let's not even talk about the fact that if we do get another, since COVID, I think the world's become very, very strict with cleanliness, if you will, and
hand sanitizer just did. I just see so many people that never had it.
Yeah.
Have got little bottles in their handbag and on their kitchen benches and on their bathrooms and powder rooms and everywhere you go there's hand sanitizers and obviously gloves for all sorts of stuff.
Yeah, but just looking at the chart as well, like Janine said, that is a huge base, $20, and the fact that we've busted out really strongly here. And what's quite interesting to me, you look at the major buying on this up leg was around August 2024. That's when it shot out and sprung out. And watch price. Sellers tried to get into where the buys were so strong. The buys said no way, consolidated, and just getting started on that next leg. So I think, this looks like at least a touch of that $37 level, $38, break that. But if we do fail from here and, just a nice little line to support it through there will give you a bit of an indication. As long as it holds out, I like it.
It's a very volatile stock, isn't it? When it moves, it really does move. So I like this at the moment.
Great growth.
Looks like it's a nice textbook setting up there, but I do like this stock. But anyway, that is a wrap for our first round of stocks. But don't go anywhere because we've got some more amazing stocks to come. One in particular that is repeating a pattern that sent the stock ballistic the last time it did this. But for now, it's time for our trending topic of the week with Janine. So what have you got for us?
Well, it's all about tech, and the tech boom is far from over. And as advances in AI and tech continue, the stock market will continue to rise. Amazon is leading the way, revolutionising the supply chain from the warehouse to your door.
I kind of came all the way to San Francisco thinking I'd see robots like Woody come and deliver parcels like this one for Amazon customers. But actually, Amazon's focus in robotics is on kind of behind the scenes at their fulfillment centers. They've got over 1 million robots working to move the shelves around, bring them to their staff to pick and pack. And they've launched a new robot called Blue Jay, you can see on the screen right now, that's essentially able to move products around and stop employees having to reach high and bend down and things like that. I spoke with Amazon's head of robotics, Ty Brady, and he talked about the relationship between robots and the human staff.
It kind of goes to the theme of how can we build our machines to help people do their jobs better in a more efficient and create a safer environment. And that's the reason for our robotics. We don't do technology for technology's sake. We always start with what problem we're trying to solve and how can we apply robotics and automation in order to solve that problem.
Sounds great. Before we go to the charts, take a look at Amazon and one interesting Aussie stock opportunity. Let's not forget the human cost of AI and tech. Amazon announced its largest layoffs in history, and it may axe 30,000 corporate jobs. Even more reason to make sure that you've got multiple income streams. Now let's take a look at the charts.
So what do you got there?
So when you look at this, 30,000 jobs to be cut, Amazon looks like it's doing well. You know,
Well, there's a lot of jobs being cut right across a lot of corporates at the moment, isn't there?
yeah, well, it's a record high. It was 27,000, I think, previously that they cut some years ago, 2022 it was. And now 30, they're saying could be as high as 30,000.
But you are right. I think you're super right when you say you've got to have multiple streams of income. I was only chatting about that last week at the Microcap conference with some of our graduates, and I said, you're in such a great spot. You know, from when I was an early age, somebody said to me, create multiple streams of income. So I've always had 4, 5, 6, 7 different streams of income, because you never know. And then right now there's so much uncertainty about your job and what AI is going to do with it. But you know, let's go and have a look at the charts anyway.
All right, now when we're looking at Amazon, the short story or the long story?
Short.
Short stories, it's a $300 stock. That's my prediction for Amazon going forward. And looking at it right now, if it holds up where it is, I'm just going to put some lines across here. You can see the huge support that's been there for the stock at around $160, I should say. And then below that, we've got a really strong one here. Now, once you do a full analysis on the stock, it's going to give you a much better prediction for where it's likely to go. But looking at this price line on the left, you can see here that I can project that forward. There's potentially a short-term resistance around 250, which is to be expected, but then the upside, I'm saying all the way to $300. So this stock goes in nice long trends. It's a really good trading stock. It's also a medium to long-term opportunity. If it takes out that all-time high, could be really nice for Amazon going forward, and it's well placed with all the tech taking jobs. So in the short term, you know, they'll have a capital outlay obviously for that tech that goes in, but then projecting that into into years into the future, it makes the bottom line look really nice.
So you're saying 20-30% growth from where it currently is. But I'm also surprised that you picked Amazon, because you normally tell people to buy Aussie stuff.
Well, now there's an interesting story here, right? Let's go back to the charts for one second. Okay, now there's so many tech stocks out there. Now I could have gone right to the bottom end of the market. I've found lots below $1 as well. You really need to do your research. What we teach students to do is to scan through the charts. Now, if you had an education, you'll be able to look at those charts and know straight away which are the ones that could be coming to lows or heading towards highs that could jump, you know, in the future and give some really nice gains. So something, you know, whether maybe it's your New Year's resolution, maybe it's a Christmas gift to yourself, get yourself educated. Let's go back to the charts and have a look. You can see here really strong support between $6 and $7. Now, if it comes down that far and it bounces from that level, that's going to be a really nice position for this stock to be in going forward.
This is Gentrack Group, not Amazon.
This is top secret tech stock.
Okay, well, he didn't say that. He just went straight on. I'm thinking you're talking about Amazon. I'm thinking, what the hell's going on?
Okay, back to the charts again.
Trying to keep up with you.
Now, it is a bit more volatile than most stocks. There is a pattern that's formed on that weekly chart that some of our students will know straight away. So that, you know, a lot of it adds up to suggesting that it's going to come back into this zone here. Now, whether this is the sort of stock that will get taken over in the future, it's a question mark, could happen. But once the stock actually comes down and positions itself there and there's an entry, you'll get trend lines and all sorts of things lining up. If it gets going nicely back towards that high, I'm suggesting it could head to $15 if the setup's right and that support level holds.
Alrighty, well, if you do want the skills to analyse stocks, just like you've seen tonight, visit our website, wealthwithin.com.au. But let's now get back to our topic and get into some more stocks. I'm going to head straight for you, Phil.
Okay, let's go. We have got REG. Now, this is Regis Healthcare Limited. Exactly on the point we were talking before, another healthcare stock, one in the aged care service providers, one of Australia's largest. Yeah, operates residential aged care. And when I go to the monthly chart and have a good look, there is one thing that really stands out to me, and it is the price that the stock is currently trading at right now. We have the IPO price. Initial, as we know, once stocks IPO, they get that initial, market participation before the settle down underneath the IPO price. We've had that. We've had a strong base out. We're in expansion, and the key is, were prices going to be accepted above that previous, high level of acceptance, if you will, new prices? It looks like we're seeing that now. We had a really strong downpour in September. October's reversed, and we saw a bit of accumulation around that level as well. So I think as long as we hold this $5.98, $6, this long-term trajectory uptrend is in place.
This looks awesome.
Yeah. And it's good that it's pulling back. Some people may look at us and think, or say, Phil, why would you say that? You know, why do you say it's good that it's pulled back? Because when you look at trends and when you understand how trends develop, again, things we teach, it's healthy trends need buyer and seller activity. Healthy trends aren't ones that look just like that.
Well, yeah, markets just don't go straight up forever, and they have to readjust. And as humans, we overbuy. We send price too high and get overbought. So they've got to readjust.
Yeah.
So I love this.
And that's your key as a trader. It's knowing that occurs, and that's where you get those good risk to reward opportunities when you can identify the waves that are going through on the market. So when we go back to that chart, we're right now coming off that pullback, which is quite nice, as I mentioned, popping on up. And we've done quite a bit in the ways of a retracement. We haven't seen a retracement to that nature, but matching the way it's gone up with the buying. So I think right now is a good place to be looking at this stock, especially the fact that it's in an uptrend. And look at that, beautiful, supporting it on the way up. Yep, now it's about strategy and identifying the right trading opportunity for yourself, whether you're medium, short-term or long-term, and riding what the trend gives you.
Look, I think there's a really nice stock. I mean, that's a really growth area. I mean, everywhere you look, they're building these retirement villages, and a lot of these are like 5-star resorts nowadays.
Oh, yeah.
I can't believe it. You know, back in the old 60s, it used to be, nursing homes, and that was it.
Well, yeah, I can't believe my wife's grandmother doesn't want to go. I mean...
Yeah, this is like the Taj Mahal, some of them.
From the 80s,
Swimming
90s.
pools, gyms, dancing, buses taking you all over the place. I know some people in them, and they're going, wow, this is the lifestyle. But anyway, let's get into the next chart.
Love to. The next one is consumer staples. Now, again, in line with what we were talking about before, sticking with the ones that are likely to give opportunities in future, and just also having a bit of a precursor to where this sector could go if it does go the other way. So we can see there that there's really strong support around this level here for the sector. And you can have a bird's eye view of what's likely to occur of any sector by doing this, and then seeing where the major resistance lies. And looking at it at the moment, it's had multiple tests of this level over time. Back, even the first one that we can see back here since 2023, late 2023, it's hit it again. So it's really got a memory around this level. And then we need to see a bounce. So that's the next thing. If it takes out this line and goes below it, it could turn around really close to it. That's always the tricky thing that you face as a trader, not knowing whether it's likely just to take it out and then turn around and go back up. That's one consideration. But I think that if it does take out that level, we're probably more likely to see a bit more of a pullback and a settling down to something around that 10,700 mark. And once it's done that, everything will be just roses for this space, because it'll be setting up beautifully. There's a fantastic line that this stock has actually met. Isn't this amazing how this happened? It just, even after all these years, I'm still amazed at how these angles are created in the stock market by prices and human activity.
You're saying how predictable the market is.
It is, really, and people say it's unpredictable all the time, but all you have to do is draw these lines, like Dale talks about in his book. Just make sure you get a copy of that book, and it's just sitting right there. Can I just have that book in case people have forgotten what it looks like? This book took
upside down.
So long to put together, but it's got all of the key things in it. And some people underestimate trend lines and money management and how important that is to your strategy. So make sure you've got a copy. And Christmas is coming up too. It makes a good present. All right, so you can see there on the chart, the angle of that trend coming down. It's hit it so many times and then reversed, and even recently it's done that. So I'd rather see it come back to the angle of this line first and then try to make a move back up. But anything's possible at this point, it really is. So one to watch, I'd say.
Now, before I go to you for the next stock, Phil, we've seen energy, we've seen healthcare, and we've just seen consumer staples. All of them have been massive sideways downward moves for 5 years, and yet everybody out there in the world's talking about a stock market crashing, and I'm thinking, when you look at those charts, you go, what the? What do you think?
Yeah, Yep, and right now it's evident that the risk is in, the high growth. It's in the tech, materials now is getting the love. But what's interesting about consumer staples and energy, and I guess to some degree healthcare, is they feed off one another, Low energy prices, or high energy prices, they affect the consumer staples sector. So there's also the study of looking sector across sector, seeing how they counteract or interact with each other, and same with financials and tech and, financials and materials and all that kind of stuff. So when you look at consumer staples, what's exciting to me is that traditionally throughout history, we've seen this sector basically be the trigger or the onset of when corrections do happen, and it's often going the other way. And we're not seeing that yet. I mean, just before our wait, you saw 07 was running in line with the market and gave a bit of a clue before the rollover. 16, 15 or 13, 14, look how early this one started, failing. And right now we're coming off a bit of a pullback. So I think tying that in with the underlying easing cycle, which it very much looks like we're going to get. I mean, bonds are showing that in the US. It's going to provide opportunity. And again, speaking to your point, you're probably going to see this sector, or you should see this sector running a bit harder if we're looking at getting a crash, because that speaks to euphoria.
All right, so have we got a stock now?
Yeah, we do.
We've got a couple of stocks, haven't we?
We do. We've got a couple. The first one we've got is Ridley Corporation. Now, this is an animal nutrition company, believe it or not, but
oh wow,
performing in this space. It feeds ingredients for livestock, aquaculture, companion animals, and operates in Australia and other markets. I think where it's really relevant is when feeding the food that gets slaughtered, if you will, for the lack of a better word.
Okay. Yep.
Rather than pets. But let's go to the chart and have a good look. And it's in a really nice uptrend. I mean, this stock is doing all the right things, performing, finding higher highs and higher lows. Right now, we're seeing a bit of a slowdown. I mean, we got quite volatile throughout this period in 2023. Sharp rise up, sharp rise down. And when you see this kind of price action, that can give you the precursor to say that we're near a top. But what's happened is we've stabilised, gone back up, and now we're finding some more support. So I think while this is running in trend, it's important to respect it. You know that saying, the trend is your friend. It's always so important to not try and step in front of that oncoming train. But the sharper we go up, the longer we go up, there's also the mindset that's required. Hey, what kind of opportunity am I relating to this, and what am I thinking about exiting? Because the second you buy, the next thing that needs to be on your mind is, how am I going to keep what I've got, and the thought about exiting right. And so within a trend, it's quite easy to apply those metrics.
It's almost more of the more the market's bullish, the more you need knowledge to make sure you keep it all, not the other way around. Because the market gets easier and easier the more bullish it is, and everybody jumps in. But then you need more knowledge to recognise when the top's happening and when you need to get out of it.
That's what's on the mind of the pros. I mean, I know the second I buy whatever it is, I'm instantly thinking, okay, now I'm in sell mode.
Yeah.
So what's the market showing me that it's time to sell and protect, as opposed to, we're in a really bullish market. I need to buy as much as I can. I need to add leverage. I need to mortgage the house. I need to do whatever I can to buy as much as I can.
That's coming.
With no thought for, hey, how do I keep what I've got? Because as you know, I mean, if there's no thought for selling, then that's a recipe for disaster.
Well, yeah, you won't be getting. And I was saying to somebody the other day, if you're chasing money all the time, you won't have any.
Yeah.
Because that's what you'll do. You'll keep chasing it, and then eventually it'll go. But we got one more stock.
Yeah, we do.
I'll give it to you.
It's another consumer staple stock. Now, this one is a beef agribusiness company. Operates cattle stations, feedlots, and beef production for domestic and export markets in Australia. Now, we know our beef is some of the best in the world, and this is one of the oldest pastoral companies, founded in 1842.
I can tell you're a city bloke.
Yes, yeah. I've never been camping in my life, but that's a fun fact. It's probably one I shouldn't have said. So when we look at this chart, one thing that stands out to me is the cyclical nature. When you talk commodities, I mean, it stands out. So knowing that is an advantage. And when we line up where things are happening, I think we're at the point of potentially another strong leg up. I think if we mark this level through here, that's a definite area to watch, is the $2. But hey, this type of price action to me means watch the stock very closely. because something's about to happen.
You want to say anything about that one, Janine? Or?
Look, I'd have to agree with Phil. I mean, it looks really good, the cyclical nature of it, and these consolidations which occur repeatedly over the history of the stock. You can see little ones there all the way back through, and that is something that you can trade. I would just say that if it takes out this low, I would let it go. So that low is $1.33, but anything on the upside of these highs, could head straight to that line that Phil's applied to the chart. Yep, it's interesting.
Yeah, I like the stock anyway, but moving on, shortly we're going to get into some massive news that came out today about one of Australia's biggest tech stocks. It has serious implications if you're holding this stock, so stay tuned. But first, let's answer your questions. Now, Jake writes, Treasury Wines Estates just had a bad earnings update recently and the share price fell 15% in a day. To me, the stock is good value as it's down a lot and it is a good company with strong brands like Penfolds. Now, I currently don't own this stock and my question is whether it is too early to buy this stock. Phil, I know you like a good wine.
Yes, I do.
I've been to Penfolds a few times in Coonawarra too.
I have. It's a very nice drop of alcohol, but unfortunately or fortunately, when you're talking about companies in the stock market, it means nothing how good the brand is unless they're able to make strong profits from what they're doing. And, they've been hit with, obviously, the tariff situation with the Treasury Wines. But I think the more important thing to answer with this question, because there's two parts in his email. And the first bit is, I think it looks good or it looks like overdone. I would question on what basis is that thought coming from, because to me, if we go to the chart, even before that 15% correction in the day, this stock was in free fall. And trying to buy stocks in free fall is where most people attempt to play the markets and why most people get it wrong. Looking for opportunities as a stock's falling, that needs to be done with a huge level of skill, and the key word there is identifying confirmation. If you're able to identify confirmation, you need to know how to look for it, where it exists, when it may happen, and that doesn't mean if a stock's in free fall that it's a good opportunity. So for me, I wouldn't have been looking at this even before the one-day correction. I think that the stock's got a lot to do before it shows any signs of a reversal, to be honest. Given
how bearish it was, 15% in a day on bad news is not unusual or should be expected, but you're asking the wrong question, Jake. It really is. Like Phil was saying, it's not about, picking a stock because it's fallen 15%, because you ask is, am I too early to buy? Absolutely, you're way too early, because what most people do is they guess at a stock, and that's really what you're doing. You're guessing at whether this stock's going to stop falling and start to rise. Whereas what Phil said, the main words that Phil said was, we need confirmation. Has it stopped falling? Because you don't want to buy it at what you think is the lowest price only for it to fall another 10, 20 or 30%. And that's how most people trade the market. We want to make sure it finds a bottom, starts raising up, and then confirming that it stopped falling before we jump into it. It's really why you need a bit of education, whether you've read my book or whether you do one of our courses, but you do need to choose another stock at the moment, because I'm agreeing with Phil, it's not great. Well, anyway, let's move on. Liam's email is next, and he said, I listened to Phil and Pedro's podcast, Global Update, Where is the Big Money Flowing in 2026 on Spotify, where you talked about certain commodities and stocks being moved by the big money versus retail investors. I thought about this when I saw CSL being purchased as a buy on some online platforms. So my question is, are most of the big stocks and brokers owned by the big money, and how can retail investors capitalise on this? Now, just to give it a little bit more context, CSL had a board meeting recently, I think it was this week or in the last week anyway. They had bad news, their share price dropped probably 15%.
Well, even today it's down 15%.
So it's down. And it's been falling. CSL's been down for 5 years, as we're talking about. So that's the context he's talking a bit about. So, Janine, big end of town, do they own everything?
Pretty much. That's the sad reality today.
And should you be worried about it?
Yeah, you should be worried about it because with ETFs now, you're putting all of your investments into the hands of fewer people. So that means a disaster when the next market comes, and people don't really think about it. And Dale has actually recorded a podcast on ETFs, so if you can find that one, make sure you do and listen to that carefully. Where is the day when everybody had their own shares? And your book is classic in helping people get out of that trap and actually put the money into some of the big stocks in the top 20. So if you're wanting to do that, that's the book for you. But do the big end of town own the market? Yep, they own it. They control it to a large degree. But we really don't care about that because we've got the chart. We can actually see when they're going to make their moves. And I think that's the real difference. Is that a lot of people who are not educated yet or maybe have only had a small amount of experience, they're focused on that. And I love conspiracy theories, don't get me wrong, I love conspiracy theories, but if you're focusing on what they're doing, that's not really the issue. It's just, it doesn't matter who does it, the chart's going to show you what's going on.
We can. The thing is, that's the opportunity, isn't it?
It is, yeah.
We know, I believe Australian super owns 6% of the market. ETFs are like 12, 13% of the market. So, but those two things is like nearly 20% of our market, let alone the rest of the super funds. So the big end of town, as Janine says, does own the All Lords, so to speak, if that makes sense. But that means opportunity.
Yeah, because the international funds own 30% of our market now. It's huge.
But probably my answer is elephants move slowly, so it's easy. When you see an elephant moving, you can buy before it moves, and it's going to carry a lot of weight behind it. So that's why it pays to be educated. That's why it pays to be doing our courses. I don't know about you, Phil, but I know a few people come up to me at the Market Cap conferences. I see you guys on the YouTube, and then they go, I should do one of your courses, but they're expensive. And our students are going, it's cheap compared to what you make.
Oh, yeah.
Because when you understand what you're doing, you're buying at the right time and you know how to manage it and sell, like Phil was talking about, money just comes flying through the door. It's like jam. But, to me, understand the big end of town is there and use that to your advantage. That's really what we're going to do. Any last comments, Phil?
Yeah, no, I think it gets spoken about a lot as if like there's this big boogeyman out there to get you. But, don't forget, the more money that gets piled into our stock market, the more liquid it becomes and the more opportunities, the better the price action. So, yeah, I think they're not your competition.
No, you are your own competition. Anyway, next is Henry's email, and he writes, I was hoping to get your thoughts on Meridian Energy. I've been watching it over the years, hoping it would get out of the sideways pattern, given its track record and the fact that it's a pure play renewable company. Do you think it's worth keeping an eye on for potential move, or is this one of the best left alone until it shows some real direction? I'll go to you, Phil.
Yeah, all right. I think this is in the renewable space, Meridian. If we go to the chart and have a look, to answer that question before it shows real direction, well, I think it's already showing some direction. It's just pulling back at the moment, and it is a stock right now that has found a bit of, price agreement at this $5 level, and it's been that way for quite a while. But that being said, we are seeing higher bases on the stock. We're now coming off the most recent pullback. I think if we can hold these levels, especially hold the March low, then there is potential that we're going to expand out to the next leg and start challenging that June 24 high, because we are, by all means and purposes, in a really nice uptrend. So, and that's another thing for me that is also important when you're looking at price action. It's, if a stock is going sideways or not moving when you want it to move, it doesn't mean that you're wrong or it needs to be thrown away. Because oftentimes, one thing you can't dictate is exactly when the price action is going to move, but you can put all the barriers and the structure around it to say, hey, these are the key levels, this is what I need to watch. And with Meridian, there's nothing to say right now that any of those key levels make you think anything else, but there's a pullback in place. In fact, it's right at the crux of where you think things should happen. So I think that's the important part for Meridian right now. You very well may be on the onset of the next leg up, and again, I'm not sure what the strategy was, whether he's bought it or whether he's thinking about buying it.
No, he's thinking about it. He hasn't bought it yet. He's just thinking about it at the moment. Just wanting your brilliant thoughts on it.
Yeah, and I think price action is king. It's in trend. All of the other stuff will and won't be. The renewables, will it continue? Is it in the right space? I always go back to the story about Tesla. I know you and I did a show on Tesla 6 months ago, maybe, maybe more. And this was at the point where Tesla was at some beautiful support levels. We did the show and we got a lot of feedback saying you guys are crazy.
Yep.
Tesla's almost now at the all-time high. And that stock has climbed, as Janine's mentioned in the past, a wall of worry, a year of just negative news, negative news, negative news. And so I think it's so important more than ever in today's world where news is coming at you left, right and centre. Watch what's happening on the price, because that is going to give you the ultimate driver in terms of where to get into a stock and where to get out of a stock. And again, we are experts at that. So please do your work and check the price action.
Yeah, but you're right. We're not 100% right. I know people out there watching will go, yeah, if you guys tell me to buy, I just buy. The stock has to do what you say it's going to do, but that's not how it works. We don't control the stocks. We don't know whether they're going to go up or down tomorrow. We just look at what we see and analyse that. And we're pretty right most of the time, but occasionally it doesn't go as we expect because, as again, we don't control the market. But I do like this stock anyway. We now have Jack's email and he says, I went to the Microcap conference. I remember seeing you there, mate, both last year and this year, and was quite impressed with Rocket DNA both times. You and me both. Could you guys please look at the chart for RKT for me and elaborate on why you think they look better this time around as opposed to how they were last year? Now, Janine, you didn't go and watch this, so I don't know whether we should let her talk. Should we, Phil? Let's let her talk.
Isn't it funny? I mean, looking at a chart doesn't require me to go to the Microcap conference. That's the beautiful thing about it. So let's go and look at the charts.
The scones and jam and cream require me to be there.
Oh, gee, I missed out then, didn't I? Looking at what happened last year. So if we go back here to September, October 2024, you'll see it was actually on its way up at that point. But then it actually slowed down. So 1, 2, 3, 4, 5, 6 months down, but that's okay. It hasn't made a lower low and it started moving back up again. So in actual fact, this could actually be the better time to be looking at this stock, as you rightly pointed out by bringing it up for the show. Thank you very much. And this could be a better time. I'm not saying it's a buy right now. You have to have your own rules, obviously, and decide what's better. But looking at the way that it's bottomed across here gives a good indication that there is some buyer support there. That's the most important thing to see. When a stock's been trending down like that, so many people choose to try to buy something the month it bottoms and then find that it either goes sideways for a long time, or like this one here where there was obviously a lot of volatility, then it just keeps dropping over time and they lose their money. So the point here is to make sure you've got the momentum behind it, which this stock clearly does. So I'm liking it from that point of view, but obviously it's a higher risk proposition here. I'd actually prefer to see it get back above this high before doing anything with it. It's looking nice right now. Remember, this is a monthly chart. I've just gone to a daily. You can see how illiquid these lower cap stocks are. They just trade at the same price over, or pretty close, over many days before they start to make a move up. And it's more like steps or laying bricks, if you like, and stacking them up than anything else. And then we see this on the weekly chart, a classic pullback, a higher low that unfolded. Clearly, this would have been a good time to look for an opportunity in this one if you were. It may have actually run on a little bit in the short term, but I'm liking the fact that it went through that October 2024 high.
Yeah, this is the kind of stock you need to understand the story behind it, and I get what Jack's talking about, because I've been to 13 or 14 of the microcap conferences, and I think that was the third or fourth time I've seen Rocket DNA present, and I caught up with the CEO, MD, afterwards, and I said, that's the best story he's given us and the best he's done at that event. So it's that point where you get from being concept stage, if I can use that word, where they're putting the hard yards in, they're trying to prove their concept, they're trying to get contracts, etc. I think they're ready to springboard. What do you reckon, Phil?
Yeah, and you're right, from last year, I saw them last year, and then from this year, the story was, we're winning this contract, we're looking to expand in this space, multi-industry type application, which is, when you talk about drones, a lot of it has been concentrated for military use, let's be honest, in Australia and globally. But this company has 3 or 4 different industries, whether it be health, police, mining, and there's so much application. And I think they're doing
agriculture. I guess the list goes on.
They're doing all the right things. So, and clearly the buyers are starting to get involved now. So
Well, I did say to the CEO, and I still can't remember his name was Peter or Chris, I can't remember exactly. I met so many people there, but I said to him, you guys are the next drone shield.
Yeah.
And so I'm not saying they're going to go flying off the shelves, the price up over the next few weeks like Drone Shield did for the hot stock tip that we did a little while ago, or Phil and Pedro did, but it's wonder what. Now is the time for our hot stock tip of the week. Now, Phil, give us a good one.
Yes. Well, today's hot stock tip is more to show, I mean, we're going to look at a stock and I want to paint a picture about how sometimes bad news may be the moment to get into a stock.
Good.
So I'm getting a little bit, I guess, different, Warren Buffettish, if you will. But the hot stock tip this week is WiseTech Limited. Now, before we get to the charts, take a look at this news that came out today. ASIC and the Australian Federal Police executed a search warrant at WiseTech Global Sydney office regarding alleged share trading by founder Richard White and 3 employees between late 2024 and early 2025. Now, no charges have been laid, and the allegation isn't against the company, it's against the individuals. That's why I said what I just said before, because yes. The news wasn't an amazing, increase in earnings or anything like that. But sometimes it's important. We're talking about a stock in WiseTech that is a leader in Australia in that space, very profitable company. The issues right now form around leadership and who's in control and running the company. So when we go to the chart and have a look at WiseTech, I think that in itself may lend to an opportunity to be one of those cases of buy the bad news, because leadership can be changed a lot faster than a company that can't produce.
Yeah, I know. I mean, I remember there was a time back with Aristocrat Leisure back more than a decade ago. It's probably close to 15 years ago. It was like 90% down on its all-time high, had no CEO, everything looks crap. If you'd bought it right then, you would have tripled your money really quickly. It just took off like a rocket after that and went back up to new all-time highs. So, Buffett says buying doom, selling boom.
Yeah.
So let's have a look.
And following also on that Telstra story, have a look at this chart here. Sorry, not Telstra, Tesla story. What's quite interesting to me is the way it's forming right now, and it is at a bit of a make or break situation. That's why I think it's so interesting to get a look at it. Today, I believe the stock is down another 10% or so. So if we draw that, we're almost near where I would expect something to happen from the buyer's perspective. And if that is going to be the case, I think following the real strong correction for WiseTech, and if it can clean up its issues in terms of leadership, which, as I said, are a lot easier to fix than a company struggling to perform, which this is not it. And yeah, have a good look. As long as it can hold that $85 or $76 level right now and start to show some signs of life, I think this is one you put on your radar and could fall in that basket of buy the bad news.
Well, I'm with you, mate. I think the tech sector is going to be still a good one for the Australian market. We need to get more tech sector stocks in it because it's quite small in Australia at the moment. But anyway, on that news, remember on Thursday we're going to put out a recording on our thoughts on the Microcat conference from last week. So watch out for that on YouTube. Phil and I will be doing that to give you our insights into some amazing companies that we saw. Now, if you want more from us, check out our video, All Ordinaries to Hit 10,000, buy these blue chip stocks ASAP.